login, like when perfect.
So I'm just going
All
to
right.
start by saying that this is our cash chat for January, and it's all about taxes with Megan. So take it away, Megan.
Thank you, Hillary. Appreciate it. All right. Welcome to the countdown to tax day. We're going to be talking about how to prepare to get your maximum refund this tax season. To start off, I have a quick activity, a this or that taxes edition. It kind of functions like a would you rather. So let's get into it. So, would you rather prepare your tax return yourself or pay somebody else to do it? There's three folks on the call, myself included. So my answer's pretty obvious, right? I do this for a living. This is my eighth tax season. I'm gonna say I would like to prepare my return yourself. What do you guys say?
Um, well, I'd say I'd also like to do it myself versus like paying someone else to do it.
Wonderful. Hillary, what do you think?
Well, I've been doing mine myself, and this year I finally decided to pay somebody else to do it because I'm
Wow. And
afraid I'm messing it up and I'm not getting what I should be getting. So,
totally.
yeah.
That's one of the biggest reasons that we hear for wanting to pay someone else to do it is how do I know if I'm doing this correctly? So that's good to hear that we're a house divided, the three of us. Cool. All right, our next question. Taxes should be taught in school so that we can understand how they work, or taxes should be prepared by the IRS on behalf of its constituents, and then the IRS should send out refunds or tax bills based on the results. What do you guys think?
I'd say they should teach it in school. Like it
Teach
would
it
be
in school.
better, yes, because it would be better for when like you get older, you will have more of an understanding.
Agreed. What do
I
you think,
agree with
Hillary?
that. I agree too.
Yeah.
Yeah.
All right. So we all are in agreement. I also agree that it should be taught in school. I think of this as a trick question because I think it should be both, right? Like, wouldn't it be nice? Other countries do it this way, in fact, where their taxation agency prepares the returns and then they just contact their constituents and say, "Hey, you owe us this much, or here's your refund." And it simplifies the process. And then I think gets rid of any anxiety that people experience at tax time. Just knowing that, hey, you don't have to come up with these answers. The answers are there for you. You just need to take some action steps and get some money or pay some money, whatever the case may be. But I think here, because that's not how we operate, it's really important that this is taught in schools. Tax season rolls around every year, whether we are prepared for it to roll around or not. So making sure that the next generation at least understands how the tax return works is definitely a good idea. All right, next question. What do you think? Tax time is a breeze or tax time freaks me out? Which one do you agree with the most?
Mm, I'd say it kind of freaks me out.
Mhm. I appreciate your honesty. Hillary, what do you think?
Well, that's why I decided to pay somebody to do it this year. And my husband and I rented out our house last year and we're getting
Okay.
ready to sell a house. So we're like doing stuff. So,
That is, yeah, that would be a lot, right? That would freak me out as well.
mhm.
Yeah, I like I mentioned, this is my eighth tax season, and by now you'd think it's a breeze, but I totally get freaked out every time, even for my own taxes, because it's just again, we are not taught this stuff in school, and even though I teach people how to do it and teach it myself, it can still be confusing.
And also, Megan, I think even just like the language around it, right,
Yeah,
is so foreign. You're not, it's
yes,
an unfamiliar that adds to it.
right. Yeah, I totally agree. I like to call it our civic mythology around what happens at tax time, what could happen to you if you do it wrong. And, everyone knows somebody who's gotten in big trouble. And yeah, I think that
Hmm.
contributes to that collective anxiety that we all feel and experience at tax time. So my next question, for me, this I say social media here, give up social media because I am addicted to TikTok. If you're not like me and you don't care about social media, replace social media with something else you care about that means something to you. But for me, that's a big deal. So would you rather give up social media for 3 months to get a 75% discount on your tax bill, Or would you rather answer phone calls from very, very angry taxpayers at the IRS call center for 1 week to get a 30% discount on your tax bill? What do
Yeah,
you guys think?
definitely give up social media.
Yeah, me too. 75%. That's what I'm talking about.
So
That's what,
it's the amount of the discount that does it for you. It's like worth
yeah,
it.
yeah.
Okay. Interesting. I have to like retool this question a bit because so far I'm the only person who seems to not be able to be able to give up social
That's
media.
funny.
I'm like, I'll take 30% and talk to the angry people. All right, last but not least, this one's usually gets people. Would you rather get a very large, very noticeable IRS tattoo in order to never have to pay taxes again? Or would you rather name your child taxes to never have to pay taxes?
Mm.
What do you guys think?
I'd say name the child Texas.
Oh, you could always have that be their official name and give them a nickname. And then you have a
Yeah,
funny story. You know why you're called taxes? You know what I mean?
Mhm.
yeah. All the money that you could save, you could put in
Yeah.
a savings account for the kiddo is one way to think about it. I have shared this question with a number of people and the answers are always so funny to me. Some people are like, "Well, like they could have a cool nickname like you said or like what about their middle name? Like maybe we can give their middle name taxes." I'm like, I make up the rules and I'm like, "Nope, not allowed." I love the idea of making my child deal with this choice. I don't have kids, so I think that's great. I don't want to have the tattoo on myself, so that's perfect. Wonderful. Thank you both for participating. And it is funny, it is silly, but there is a point to this, which is for us to recognize that when we talk about personal finances, in general, the personal is always removed from it, right? We think about a budget. We don't think about how that reflects our financial identity or our money personality. And when we think about personal finance, we don't think about taxes. We don't think about these things as being a part of our money personality. And this activity hopefully shows you that your money personality and your taxes are inextricable. They are super related to one another. It helps you figure out if you're someone who's going to drag your feet to the April 15th filing deadline or if you're going to get it done immediately. It helps you understand your risk tolerance. Do you want to be the person responsible for the return or do you want to give it to somebody else? And so on and so forth. So, again, it's a silly icebreaker, but it also gets us thinking about who we are when tax time rolls around, which is an important first step to maximizing your refund. The next step is to figure out a couple of important fundamental pieces of the tax return, what I call taxes 101 here, what you really need to know in order to prepare your return accurately. So, first question that I get whenever I'm working with a client is, do I have to file in the first place? Do I have to go through all of this anyway? So, maybe. It really depends on three things here. You see this table. This is from one of our resource books, but this is also available on the IRS website. Essentially, you start by looking at your filing status, and I'll explain more in a few slides about what that is. But you start there. And then you look at the age that you were at the end of the tax year and the total amount of gross income that you had at the end of the tax year. Those three pieces combine to determine if you are legally required to file. So I'll take myself, for instance. My filing status is single. I'm under the age of 65. And if I made under $14,600, I wouldn't have a legal requirement to file my taxes. However, if I made over $14,600, I would legally be required to file a tax return. Another common filing status that's used by people with children is head of household. So I'll use that example here as well. So if I was head of household, and I'll explain what that means in a couple slides, if I was under the age of 65, I would have to make less than $21,900 in order to not have to legally file my taxes. If I make more than that amount, then I legally must file a return. So that's the first question that you want to ask. Am I legally required to file? That said, there are going to be several reasons why it might be a good idea for you to file your taxes anyway. The first such reason is that you might be eligible for certain refundable tax credits. What refundable means is, let's say you owe $2,000, or that's your tax liability, and you get a tax credit for 3,000. A non-refundable tax credit is going to bring your tax liability from 2,000 down to zero and stop there. A refundable tax credit is going to say, I'm going to bring it down to zero. And what are we going to do with that $1,000 that's left over? It's going to go into your tax refund, which means it goes directly into your pockets, which is a great thing. More money for you at tax time. So the only way that you can get these tax credits is by filing your taxes. And there are a few of them that we're going to talk about later that are really worth a lot of money. Another good reason that you'll want to file a return, even if you're not required, is to get money that you've already had withheld from your paychecks back to you at tax time. So if you have a W-2 job, so maybe you have a salaried job that's full-time, or maybe you work hourly wages and you have taxes taken out every 2 weeks of your pay, you can then file your return to get that money that you've had taken out back to you. The thing is, you have to file. The IRS doesn't call and say, hey, you don't have a filing requirement this year. Here's your money back. You actually have to initiate that process, and you do that by filing your return. Last but not least, it's really important to have tax records in order to reach your financial goals. So maybe someday you would like to buy a home or start a business. In order to do those things, you really need to have your tax records in good working order. You need to demonstrate a few years of tax returns, in fact. So in order to stay on track toward meeting your financial goals, it might be a good idea to start filing your tax returns, even if you're not legally required to do so. All right, so I've mentioned so far a few times filing status. So every tax return has a filing status, and the filing status is going to impact your standard deduction, which I talk about in a moment, as well as your tax rate or the amount that you're charged in taxes each year. So there are 5 options for filing status, each with their own eligibility rules and requirements in order to claim them. And ultimately, you might be eligible for several of these, and you should choose the one that most advantages you or is most advantageous to you, as we say in our work. Or in other words, the one that's going to result in you paying the least amount in taxes and receiving the largest amount in your refund.
Yep, that's what we're all about.
Yes, indeed. So let me walk through each one of these. So single is pretty self-explanatory. It means that you are not married and you don't have any dependents. If you're not married, you have another option for you if you do have dependents, and that's head of household. So as you see here, head of household filing status is for individuals who are considered unmarried and have a qualifying dependent. I'm using IRS language here because the IRS has some specific requirements around this what is considered to be unmarried and everything. But essentially, if you are not married, you can choose either single or head of household. If you have dependents, you're going to choose head of household. If you're married, you have a couple options. There's married filing jointly and married filing separately. When you're married filing jointly, that filing status is for folks who are married and combine their tax worlds together at tax time. That means they put they put their income on the return together, they put any expenses, itemized deductions in general, and so on and so forth. They're combining it all at tax time and doing it together. Married filing separately is for folks who are married but don't want to combine their tax worlds together at tax time. Here's the thing. So married filing separately is the least advantageous filing status. And the reason that is because it actually disqualifies taxpayers from claiming dependents, from using certain tax adjustments, and disqualifies them from certain tax credits as well. Not only that, but I'm just going to backtrack a little. If we look at the filing requirement, married filing separately people have the lowest filing requirement. They have to file, they legally are required to file almost every year unless they had no money, right? Because that filing requirement at any age is only $5. So married filing separately is really, like I said, the least advantageous filing status. If you are married, you would want to ideally choose married filing jointly. And I'll explain in a moment. And the reason that is because there's a dollar amount associated with each of these filing statuses. So I'm just going to jump forward real quick and then I will jump back. So you see here, a married filing jointly couple has a standard deduction, and I'll explain what that is in a moment, of $29,200. Married filing separately is much, much lower, right? So a standard deduction, in other words, is an amount of money that you can exclude from your income from tax. So let's say I made let's say I file as single and I made $34,600 in 2024. I can say I made 34,600 minus 14,600 on my tax return. So instead of paying taxes on 34,600, I pay taxes on the reduced amount of 20,000, which is, it makes a big difference at tax time. So again, choosing the right filing status is the first step to making sure that you're maximizing your refund, because it translates into these dollar amounts. When you file separately, you can't hide as much of your income from taxation. More of your income is going to be subject to taxes, and so you pay higher taxes. And again, remember, you can't claim dependents, and dependents translate into child tax credit and other tax credits that can help you get a refund and save money and maximize your refund at tax time. So I'm just going to jump back in here to kind of say married filing separately might be an option for you if there are compelling circumstances, like if you are a victim of domestic abuse, for instance, and you have not legally been able to get divorced, and so the only option you have is married filing separately in order to keep your finances separated from your estranged spouse. That would be the only compelling circumstance that I have seen in my experience, or if there's a couple of other ones, but that's the big one. Again, you want to think about saving money at tax time. Married filing jointly is one way to do it. And then last but not least is qualifying surviving spouse. People who can use this filing status have a spouse who passed away during in recent tax years. So let's say I'm married and my spouse passed away in 2024. In that tax year, I can still file married filing jointly. In the next year, I can file qualifying surviving spouse, so long as I meet the eligibility requirements. I can do that for 2 years after my spouse has passed away. And in order to claim that, I must have a dependent child living in the household. So that's something that's really important. It can't just be you're now single if you don't have a dependent child. All right, so jumping forward, just going to quickly review. The filing status single has a standard deduction of 14,600, same as married filing separately. So you essentially have the same filing standard deduction as a single person if you file separately. Head of household has a higher standard deduction of 21,900. Remember, head of household means that you have a dependent, but you're unmarried. So that number goes up to account for the increased cost of living of having children. And then married filing jointly is like having two single taxpayers combined in terms of the standard deduction. So you get double the standard deduction. And then when you have qualifying surviving spouse, that's when you get to keep the same standard deduction for 2 tax years as married filing jointly. So it's supposed to help the surviving spouse kind of ease their way into living the tax situation that might result from their spouse passing away. All right, and last but not least, I want to really quickly review what income needs to be included on your return. The answer, frankly, is most of it, but there are a few things that you don't have to include. So, for instance, child support does not have to be included, veterans benefits, workers' comp, public benefits. So, if you receive food stamps or SNAP benefits, utility assistance, things like that, vouchers, those don't have to be included. Death benefits. If you get a tax refund from the IRS, that doesn't have to be included. Insurance proceeds and Social Security benefits. I have an asterisk here. There are certain situations where Social Security benefits might be taxable, but I want to be clear that Social Security benefits for children are never treated as taxable income for the parent or guardian. So Social Security benefits might be partially taxed. I see this when you have another source of income. So for instance, we have a lot of elderly clients at Cash Campaign, at the Vita program, and those clients will be collecting Social Security benefits, but also work like a couple hours at the Walmart bagging groceries or something like that.
Mhm.
And then in that case, their Social Security benefits do become taxable, which is something to call your legislators about, right? Because they're living on a fixed income, trying to do their best. But anywho, examples of taxable income, wages, like your W-2 form. Maybe you have a side hustle or a gig, or you're an entrepreneur who started your own business and you have income from self-employment. All of that would be considered taxable. There's also interest, dividends, prizes. If you're, gambling, things like jury duty, all sorts of things. And the IRS has a comprehensive list of taxable income on their website, but these were the most common forms that we see at tax time. Some of these forms of income have taxes withheld from them. So we mentioned the W-2 at the top of the hour, what that means when you have a job that takes taxes out for you. If you have any of these forms of income that have withholding, you can recoup some of them at tax time, depending on your tax liability, or it can be used to offset your tax liability. Okay, now getting into the good stuff for all of you, folks with children.
Hold on
So,
just a sec. I just want to point out the time. It's almost 1. Are you okay if we keep going over, Kayla?
Yes, I'm okay.
Okay, awesome.
cool.
Okay.
Thank you. Appreciate it. So, I like to start this section with a question, which is, what would you do if we gave you $10,000 right now? And you don't have to answer it. I just want you to think about it, because this is the question that you might have to ask yourself at tax season, depending on the different credits that you might qualify for. So to start, I have the child tax credit, or CTC. Here in Maryland, there is also a child tax credit. So we have two child tax credits to think about here, the federal one and the Maryland one. For the federal one, it's worth up to $2,000 per qualifying child. There are some requirements around what a qualifying child is. And those look at things like their age, if they lived with you, the kind of support that you provided them, etc. Of that 2000, up to $1,700 is refundable, which means, again, that means that you can get it back in your tax refund. So it's worth a lot of money. Depending on how many kids you have, this could actually make a big impact on your tax return. The Maryland child tax credit is worth $500 and is fully refundable if you meet certain eligibility requirements. And you must have an AGI, or adjusted gross income, or income in other words, under 15,000, and a child under age 6 to qualify for this. So make sure to mention, if you have a child under age 6, make sure to mention this during your tax prep, or to keep this in mind and see if you qualify when you prepare your taxes yourself. There's also the Earned Income Tax Credit, which is a credit for working people with low and moderate incomes. The idea is that it boosts the income of workers paid low wages, by giving them a credit a pretty substantial credit that helps them make ends meet throughout the year. The Earned Income Tax Credit is actually fully refundable, and we know what that means. That means that you're getting all of this money that you're seeing here, and it is worth a lot. So it has pretty strict eligibility requirements, like the taxpayer and any dependents, they all have to have social security numbers for the federal one. And the taxpayer must also be between age 25 and 65 for the federal EITC. So it can be pretty prohibitive, right? There are people who don't have socials, or who are under 25 or over 65, who could really use this money, but they don't qualify. The state of Maryland, with help from the cash campaign, was able to create an expanded earned income tax credit at the state level that people who don't have socials are eligible for, and people who are under age 25 are also eligible for. And it's worth 50% of the credit that you would have gotten at the federal level had you been
Great.
eligible. Isn't that
That's
cool?
great. Yeah.
Yeah, that was a big accomplishment down in Annapolis a couple years ago from our team. So the EITC for at the federal level is worth at most $7,830. That's if you have three dependents or qualifying children. And then you can see if you have none, it is worth a meager $632. They're trying to get that to go up so that there is more earned income credit for people without kiddos. This credit is the single most effective poverty alleviation tool that we have in our toolbox as a country. Each year, millions of families are lifted out of poverty, and poverty is lessened for even more. When the earned income tax credit and the child tax credit combined together, the last census showed that it lifted 10.6 million people above poverty and made it less severe for 17.5 million people. So that was from 2018, and I'd love to see new data on that because I'm pretty sure it continues to help people. And the EITC and CTC are also connected to positive long-term effects and childhood, also improved childhood outcomes. So improved well-being, and long-term effects like better health and higher earnings in adulthood are linked to the earned income tax credit. So there's a lot of great work being done around it. And then this is the last year. If you have not already filed your 2021 taxes, this is your last year to be able to do that and claim the tax benefits that were available, the relief that was available to us due to the COVID pandemic. So specifically, the child tax credit was expanded, and by that I mean it increased in value by quite a bit. So it was worth $3,000 or $3,600, depending on the age of the child, which is, again, we just went over the numbers for the regular one. So it's worth a lot more. And then also there were economic impact payments or stimulus payments that were worth $1,400. So make sure you claim those. If you haven't filed and you have to file, just so you know, the economic impact payment or stimulus is referred to as a recovery rebate tax credit in your software. So that's what you'll want to click and receive if you're eligible and you didn't already complete a 2021 tax return. And to be clear, you don't have to have a filing requirement to claim these credits. You don't have to have worked or anything in order to be eligible. There's also credits for if you have to put your child into daycare, or aftercare or day camp or anything like that while you were working or pursuing work, looking for work. Those are the requirements. You can't just be sitting at home playing Xbox or anything. You have to be looking for work. So this credit is used to offset expenses paid to care for a dependent, so that you can work. And the dependent child has to be under age 13, or they can be any age if they're disabled and incapable of self-care. So under age 13 or any age if they're disabled, it's worth $3,000 to $6,000 depending on, so it's 3,000 for one person and up to 6,000 for two or more people on the return. In order to claim it, the taxpayer has to have the provider's name, their address, and their employer identification number or EIN, or if they don't have an EIN, then a social security number for the provider will suffice. And the daycare should also provide the parent or you with a form containing the amount that was paid, as well as the information that's required for the return. Maryland also has two things for people who have their kids in daycare. They have a credit that's worth about a third of the federal credit, and it's refundable if your income is does not exceed 55,750 if you're or 83,650 if you're married filing jointly. They also have a subtraction. You can take both of these. So you can get a credit and you can also reduce your Maryland taxable income by quite a bit here, between $3,000 and $6,000. Again, three for one person, six for two or more. So again, that reduces the amount of taxes that you pay and can even be help lead to a big refund for you. The last tax credit that I'm going to spotlight is the renter's tax credit, which isn't on its face a credit for children or people with children, but you're eligible for this if you have dependents in your home under age 18, which is great. If you qualify for it, it's worth up to $1,000. The one caveat is you have to be on a contract or a lease. There has to be like an official binding agreement. And it's something that you have to apply for and reapply for annually. There's a September 1st deadline this year. And if you want to know more, please get in touch with us. We have a partner, Economic Action Maryland, that is doing a lot of great work around renters tax credits and screening people for eligibility for that. All right, I'm going to close us out with some options for free tax preparation services. So you don't have to pay any money. You've already worked throughout the year to get this money. keep as much of it as you can. Don't pay a paid preparer. Come and get this done for free by the Cash Campaign or another VITA program, or learn about how to do it yourself for free. So I've already mentioned VITA a few times now, and VITA is an acronym. It stands for Volunteer Income Tax Assistance, and it's a program run by the IRS or Internal Revenue Service. Every year, VITA program participants must train and certify in tax law. Every year without fail. And this is something that sets us apart and gives us a high accuracy rating when it comes to how accurately we prepare our returns. It's a wonderful program. If you are eligible, I'm sorry, if you make $67,000 or less, you are most likely eligible. There are a few caveats there. So there are some situations that we cannot do at VITA. It's like out of our scope is the word that we use. So for instance, if you are like, let's say you run a small business and you have employees, we can't help you. If you have inventory, if you're a member of the clergy and you receive payment for that, if you have farm incomes, and I can go on and on and on. But for most of you on the call or in general who listen to this recording later, you should check if you're eligible. You will most likely be eligible. And tax prep at this program is completely free. It doesn't matter if you have all sorts of additional forms that you need. We will prepare your return for free. So in order to learn more about the Cash Campaign's free tax prep offerings, you can visit bemorefreetaxes.org. Or if you are outside of the Baltimore area or Maryland, for instance, or if you'd like to tell friends and loved ones, like I'm from New York City, for instance, I tell everyone, check the IRS website. This picture here, there's a tool on the IRS website where you can find the nearest free tax prep location to you in miles by your zip code. So if you leave Maryland or you have loved ones elsewhere, make sure you tell them about free tax prep options for them as well. This is our flyer. If you would like, I will have Hillary share this out with you all at the end of this. But this shows how to make an appointment, the various locations. We're in pretty much every geographic region of Baltimore. And we're also around the state of Maryland. So if you have people elsewhere in the state, please have them check out our website. We have partners in, I think, 17 plus counties at this point. But anyway, so this flyer shows the eligibility requirements, how to make an appointment. There's that appointment number that you can call, 410-234-8008. You can call between 9 and 2 Monday through Friday, or you can make an appointment anytime at bemorefreetaxes.org. As you can see on the right-hand panel of the flyer, there is a list, a checklist of all the things that you need to bring with you to your appointment. So make sure you check that out before you come through. And even if you don't come to a VITA site and you do your taxes yourself, you can consult this list to make sure that you're completely prepared to do your taxes yourself and you haven't left anything out. You should also come join us at the upcoming pop-up
Yes.
that we're having. Yeah, we're partnering together to offer free tax prep just especially for you all in the BITP program. We have two dates available, February 19th and March 5th, 9 a.m. to 2 p.m. on both of those days. And the location is, I believe this is BITP's head office, right?
Right.
Yeah, so you guys know where that is. And in order to sign up, you can either you can contact myself, Hillary, or Davon, and we put Davon's information here on the slides to sign up. And we hope you'll consider getting your taxes done by us. Let's say you are over the $67,000 income limit. We still have options for you if your income is too high for VITA. So for one, there's My Free Taxes. My Free Taxes is a program of the United Way, which maybe you're familiar with, is also a nonprofit organization. So they're not going to upcharge or charge for anything here at all. They're not trying to make money. Last year, their income limit was 79,000. They have not announced their current year income limit, but I'd imagine it'll be a little bit higher than that. So again, if you make over 67,000 but under 79,000, My Free Taxes is a great option for you. Cash App Taxes. I have not used this, but I can confirm that it is a free service. I'm not paid by these people, not yet at least, but it's a great option if you are over income for My Free Taxes. And then, excuse me, free file software is always available on the IRS website. You have to do your due diligence because there are certain income limits and things that they might trick you, right? They might say, "Oh, this is free for someone in Virginia, but not for someone in Maryland," and things like that. So you want to make sure you double check on the free file stuff. There's also Direct File for Marylanders, which is a new program that just launched as of this year. You can file directly with the IRS. It is not a Vita competitor, to be clear. It's a new option, and about 97% of Vita people are going to be eligible for it. There's a tool on the IRS website you can use to see if you're eligible, but it's great. It just cuts out the middleman. There's no third party.
Mm.
You and the IRS, and you just do it between the two of you guys. Yeah, and then last but not least, I just want to show you, I'm not going to walk through each of these, but when you get the slides, you can click on these links to go to various tools and web resources that might help you prepare for tax time. So if you want to know if you're a dependent or who you can claim as a dependent, which filing status works best for you, if you're trying to track down a missing W-2 or other document, set up a payment plan, check on your tax preparer's credentials. Maybe you want to know where your Maryland refund is. I also have state resources. And then lastly, I have resources for all of you with children about all the different tax credits and offerings that are available to you at tax time that I talked about today. Child tax credit, earned income credit, the daycare credits, the Maryland state ones, stuff about the COVID relief, and the renter's tax credit as well. And then last but not least, I have my email address that you can take down and get in touch with me if you have any questions, if you would like to learn more, if you'd like to volunteer, what have you. And then last but not least, there's this. Hillary, I don't know if we can probably stop the recording here because I think Kayla's the winner, right?
Okay. Uh,